Welcome back. Joining us on the show now is PR Somasundaram. He's Regional CEO India at World Gold Council. Som, hi, thank you so much for joining us. First of all, on the price move itself, from an all-time high to 2,000 rupees shaved off in a matter of 2 days itself, how do you look at the current volatility that gold is showcasing? All right, looks like we've lost Som there. We'll try and get back at him. But clearly, there has been a lot of volatility in case of the gold prices. Remember, we were talking about on how the gold prices have hit an all-time highs at 60,450 rupees. From those kind of levels, we're trading at 58,500. So clearly, 2,000 rupees gone there. And the international markets also have come off from 2010 almost to around 1940 on your screens right now. Som, first question to you is clearly about the price volatility that we're looking at in case of gold.
Yeah, this is always, there will be a wait and watch attitude when prices move so sharply up and down among the retail consumers. But we can definitely say gold is in a positive zone. But at the same time, Manisha, this is also March. So, and with better tax compliance, now people will be more focused on tax-related investment. So there's a lot of interplay of forces now, but clearly it's building a strong momentum towards gold.
That being said, Som, it is a US Fed meeting, and I know World Gold Council has done a lot of studies on the impact of interest rate cycles on gold. What we are witnessing right now, how are you analyzing it?
Well, as we have always said that, there will be an immediate reaction to any rate increases. But we have always seen that once the cycle is over, it has always turned positive for gold. So what we expect is that there will be, of course, short-term reactions. There are ETF outflows, which we have spoken about. But certainly, this is not a never-ending exercise. And that is the time when it will turn very positive for gold.
So, in this week itself, when we hit an all-time high, we do understand that the Indian markets were, the buyers were totally absent. There was a lot of sellers actually that turned into with their old jewelry to sell and encash those prices there. But and the markets also turned into a discount, by the way, because there were no buyers. Today being Navratri and Gudi Padwa, are you looking at buyers coming back, especially with the markets having corrected as much?
You will see certainly buyers coming back, but Manisha, volatility is never good because if it is dropped by 2,000, those who want to buy will see, will it drop by another 1,000 rupees? And as I said, it's also March. We cannot forget the fact that there is a higher tax compliance in the country now. So you are not going to have a rush towards gold at this moment of time. I'll be surprised if it is. And these moments are not enough to attract buyers in a very big way. There will be normal buying. These are auspicious occasions, but I don't think it is going to have a mad rush towards gold at this moment of time.
So also, there are various options to invest and buy as well now. I mean, physical buying has been one part of it, which continues to be a bigger point, by the way. But millennials, a lot of people who look at gold as an investment, create a place for it in their portfolio, are looking at digital gold, ETFs, mutual funds, and sovereign gold bonds, and etc. How have you seen the buying pick up for the first quarter in this year until now?
Well, these digital gold, sovereign gold bonds, ETFs, clearly we see a trend of people moving towards it. But in the overall scheme of things, they are still very small as compared with the physical demand for jewelry and bars and coins. But as we see it, with various measures being taken by the government, I think you'll see in the next 5 years, these become real stories about the changing gold market in India.
So what is the percentage gain that you see in across investment portfolio when you look at gold? I mean, as you say, these are really small. We still look at them at 2 to 5% of the overall basket as of now. But what is the kind of percentage growth that you're seeing? And if you say that next year, 5 years, it could be a story, then what percentage holding or contribution would this make into the overall market?
Manisha, if I may just make a guess, about 180 tons of bars and coins, which is very explicit investment objective buying, is sold in this country. So 160 to 200 tons. So you keep it at 180 tons. But these are all much below, in terms of demand, much below 10 tons altogether. What I would probably expect is that you may see this jump if all the regulatory enablers are in place. You will see them jump even to half of what we have in bars and coins.
All right. So another thing is the hallmarking and the HUID, which now has been made compulsory. And we do understand that the Kerala as a state has asked for an extension for that deadline. How do you see jewelers overall responding to this this being mandatory from 1st of April?
Well, first of all, HUID, the unique identification for each jewelry, it's an excellent piece of work that has been done by the government, by Bureau of Indian Standards. I think we should take it to the globe. Just like our UPI, we can lead the gold market with this, because this definitely improves, safety for the consumers. But closer home, I think we will have some pressures. People would want to sell their old inventory. They will say we are carrying it, etc. But it is. I would probably think you could see this for another year or maybe 2 years. You may have some parallel things going, but it will eventually all settle in place. We will have a HUID market.
All right, we take that point. Important one raised, Mr. Somasundaram. But, Manisha, just a word. Wanted your thoughts. 60,000 plus is what it crossed yesterday. Do you think today's decline could be just routine profit booking, and that the strength for gold in the near to medium term remains because of the volatility that we're seeing in the world?
Oh, well, absolutely. I think we went up by $200 in a matter of 10 days, and we've come off by $60 in a matter of 2 days again.
Right.
But opportunity to buy, yes. Another thing is that ahead of the US Fed meeting, and we don't know what's going to happen there, there is some profit taking that the bulls clearly have taken off the table. Having said that, the street believes that 1950 is going to be an immediate support. On the higher side, there are targets as high as coming in from global banks and brokerages until 2150, 2200 as well, and that would be an all-time high, because until now the all-time high is 2075. So most banks believe that we will cross that this year.
All right, I don't know what people are thinking about gold right now, but what's clearly on their mind is pizzas and maybe some alcohol, because we have United Spirits at the high point of trade. We have Jubilant Foodworks at the high point of trade ahead of lunchtime as well. What we'll do is wrap up on this edition of Halftime Report. Business Lunch comes up next.